Even though Stripe is super simple to get started, it's not the best solution in the long run. If you were just getting started and somebody said, oh, just use Stripe, you could literally talk to your bank. Now, your bank's not going to be the best price, but they can do it. It's not that people don't want to deal with risk. It's that they absolutely do. Finding the right person to want to deal with that risk for your business is what's critical. That's the knowledge that most business owners need. I'd rather just help people have a really secure foundation to have payments come through.
How's it going, everybody? Welcome back to another interview. Very blessed to be joined by Josh Knox today, the founder of Noomerik, which is a payments company that integrates directly with GoHighLevel and has saved multiple people's livelihoods by letting them continue to accept payments after getting shut down by Stripe, which we'll talk about today. And before we get into today's episode, I'm super excited to share with you a little bit about one of our sponsors on the podcast today, Riverside. If you are a content creator or a podcaster and you're tired of your recordings with guests who sound like they're speaking with you through a tin can, then Riverside is for you. We've all been there. You're ready to do the interview. You've got your questions ready. Your guest is all set to go, and then your internet connection is unstable, message ruins the entire recording. With Riverside, you can get rid of those internet issues and choppy audio and have clean sounding recordings effortlessly. You see, the interesting thing about Riverside is that they record each part of the episode locally on that person's device, and then they upload it to the cloud, so you make sure not to miss anything, even if it's the other person's fault. And by the way, this episode was actually recorded on Riverside, so you can see the quality firsthand. But that's not all. Riverside's amazingly user-friendly interface is super easy to use, which allows you to spend less time troubleshooting technical difficulties and editing your podcast, and instead spend more time speaking with amazing guests and getting recognized for your valuable content. It can be used for podcasts, video interviews, video marketing, panel discussions, talking head presentations, and live broadcasting. And not only does it just record all of those things, it has a ton of other built-in features that make it a no-brainer for podcasting and video. Things like AI transcriptions, editing a video by removing text, AI clips, captions, and an awesome short-form video editor built right in. And they even recently came out with a feature that auto-edits the long silences out of your podcast to the perfect length. It really is your all-in-one online video and podcast studio. And if you need more convincing, Gary Vee, Guy Raz, and Ali Abdaal all use Riverside for their content and podcasts. But the very best part is that I've teamed up with them to get you guys 50% off any plan. And to get that discount, all you have to do is click the link below and enter the code It's Keaton at checkout. Thanks so much, Riverside, for sponsoring this episode. And with that said, let's get started. The reason that this episode I think is so important is 2024 is the year of AI. It's also the year of GoHighLevel, obviously. But it's also the year of high risk payments and kind of Stripe starting to signal that maybe there's some new rules that are going to come into play. And there's just a lot of misinformation in this space and a lot of disinformation that people don't even understand what they're dealing with in the first place. So I knew Josh was the best person to bring on for this. Josh, thanks for being here, and excited to have you.
Yeah, thanks for giving me the time. I appreciate it. You and I met a couple of years ago, and we've had a chance to get to know each other. So yeah, I really appreciate the opportunity to kind of share what I know, what I've experienced, and hopefully help somebody, even if it's just a bit of knowledge to help them with their business. So yeah, thank you for the time.
Yeah, so let's start. I don't know. 100 years ago when you started your career? Just kidding.
Well, that's
how did you get into payment processing?
Yeah, it's a good question. So I've been in a lot of different industries. Let's see. I've been in the beauty industry. I worked at eBay for a number of years, project management. So I've been on the internet side of business. I've been in real estate, and I've had the good fortune, I think, to do a lot of different things in a lot of different industries. So, what ultimately got me into payment processing was marketing. I spent a lot of my career in marketing and sales, and whether that was my own business as a real estate agent or, even as a young kid, I can remember having an entrepreneurial heart and wanting to start. I started a very short-lived pressure cleaning business. I lived in the Northwest, and if you've ever been there, there's a lot of, it's not mold, what is it? Green stuff all over the sidewalks.
Okay.
So anyways, I've always had this entrepreneurial heart, and I had sort of explored that through marketing and sales. And I got into marketing, what's called an ISO, an independent sales organization. I worked with a small company out of Florida, really, really great people. And, kind of got into the world of payments and was doing marketing for them. That's what led me to GoHighLevel. They had a lot of disparate marketing pieces, ClickFunnels, WordPress. I mean, it was out there. And so GoHighLevel, which is a really great tool, obviously, helped me bring it all together for them. And then just by way of being in the GoHighLevel group, doing contract marketing work for that company, I started just seeing people talk about Stripe. I was obviously in payments, but didn't know on the marketing side, and just saw a problem that needed to be fixed, really, and so, I went to that company and I was like, hey, I think there's probably a place we could build a solution here. And they wanted to go a different route. So I stuck with this route and, we built Noomerik. That's how I got into payments.
Very cool. So what is the problem with mainstream payment providers and running a business like GoHighLevel or an agency or a coaching business in 2024?
Yeah. The biggest challenge is just lack of information. We were talking a little bit before this, misunderstanding in a lot of ways. Stripe is a really, really great technology. People can search my Facebook profile and even people that are my clients hear me talk. I know I'm not a Stripe hater in any way. They're a really, really brilliant technology. Obviously, they've built a really, really great business, but not every business is suited for another business, right? So I wouldn't go buy Formula One tires for my Ford Explorer, right? I would buy regular tires from like a Les Schwab or something. And so sometimes the fit just doesn't make a lot of sense. And I think the biggest misunderstanding with somebody like a Stripe is, while they did start off in the internet space and did really well there, they are shifting their business model. Another analogy, like I'm pretty sure it's Honda, the car company, started off as a rice maker. Sometimes businesses just shift their business focus, and Stripe is showing that. I mean, they're literally turning people off who used to not have a problem. I've got plenty of clients who never had a single issue with Stripe. They never had a chargeback. They didn't have refund problems. Nobody ever made a complaint. And Stripe comes along after they do, $1 million and says, hey, this is, we're going to move on from you. This is not the right business for us. So sometimes businesses just don't fit together. And that's, I think, the biggest piece that's going on. There's this misunderstanding that even though Stripe is super simple to get started with, which is one of their greatest assets, it's not the best solution in the long run, right? Like hitting the easy button when it comes to payments, while great in theory, and anybody in payments will tell you the faster we can get you onboarded, the better for everybody. It's in a high risk space, card not present, right? So all of your customers, they don't walk into your business. You're selling a digital product, a SaaS product, coaching, consulting. You don't actually see them deliver the card to you. They're not swiping it in a point of sale device. That is a level of risk. If you sell something higher ticket, over $100, $500, $1,000, that comes with a higher risk. These things, Stripe is now indicating are not in their wheelhouse, or they don't want them to be. They're saying, it's just not good for us to keep moving forward with your business. So that leaves the business owner in a lurch, this lack of knowledge, right? And so that's the biggest drawback that I've experienced, that my clients have experienced with Stripe is again, not that they're not a good technology, not that they're not a good company, but when you onboard 20,000 or so people a month, and 30% of those of your entire portfolio is in frozen funds because you're not quite sure that you want to take that risk on, you just created a really good way for people to come on and take payments, then it poses challenges. And so, lack of knowledge, right? It's just understanding how you want money to flow into and out of your business. And let me just add this last piece. What people don't think about when it comes to taking credit card payments is there's a risk that's not talked about, okay? So you and I, when we go spend money on a credit card, we are taking a loan, right? mean, we're literally taking a loan from American Express, Discover, whatever, to be able to pay for something. The risk of that to the card company is, will I make that payment back? The risk to the card company accepting that payment for a merchant is actually twofold, right? Meaning, if you have a balance, a credit limit of 10,000, and then the business owner has a credit limit of 10,000, and 10,000 comes in, if the business owner takes that money out of the bank, right, because it's been deposited, and as soon as that deposit comes in, then that $10,000 has gone out. Well, if they then don't deliver that product, another 10,000 goes out because the credit card company has to now refund everybody for the business owner defaulting, right? Mm-hmm. Or they also run the risk of that person not paying their bill because they didn't get the product they received. And so as we think about taking payments, it's not that it can't be done. It's not that people don't want to deal with risk. It's that they absolutely do. Finding the right person to want to deal with that risk for your business is what's critical. That's the knowledge that most business owners need.
Hey guys, just jumping in here to give you a quick word on our sponsor GoHighLevel before we get back to the interview. If you don't know already, GoHighLevel is the top sales and marketing solution for any business, but particularly agency owners or anybody that needs a software product to resell to their existing customer base. It has everything you need to capture, nurture, and close leads for marketing clients. And the best part is GoHighLevel believes in not taxing the agencies on its platform, so you can get unlimited clients for one low flat monthly fee. The best features include a CRM, funnel, website and email builders, course hosting platform, robust marketing automation builder, a consolidated chat stream with WhatsApp, email, SMS, Instagram DMs, and Facebook DMs, reputation management, social media posting, tracking and analytics, and so much more. And as if that wasn't enough, GoHighLevel is fully white labeled, meaning that you can take the platform and put your own brand on the desktop and mobile app and resell it to your industry for whatever price you want. Essentially, what GoHighLevel has done is brought the bar for starting a software company way lower, so normal people like you and I can help our clients with an amazingly robust software without paying hundreds of thousands of dollars in development costs. I am not kidding when I say hands down, GoHighLevel is my favorite software of all time. It has been integral to my success with my agency. It helped me increase my clients' results and retention, and I use it every single day for my own business. And if you sign up for GoHighLevel today, not only will you get a 30-day free trial, which is not available on their website, but you'll get all of the bonuses listed at itskeaton.com/mastermind, which gets you support, templates, and courses to kickstart your GoHighLevel journey and get those first few clients or scale to your next few clients. If you're already a GoHighLevel customer, you can also get all of those bonuses by upgrading to the next highest plan underneath my link. Instructions for that are also at itskeaton.com/mastermind. Okay. And it's like when you say risk, it's not like they're worried about a lawsuit or something legal happening. It's basically like if too many people are doing something, let's not say illegal, but if they're not delivering the product properly, and we just happen to be exposed to all of that risk on a single day or in a single month, we could be in trouble, right?
Correct.
Okay.
Yep. Yeah. I mean, think about this. If $10,000 comes into your business next month, and it was all credit card sales, it wasn't debit card sales, nobody paid you by ACH, right? Then that $10,000 was borrowed by, let's say it was 10 people paying you $1,000 each. There's a risk inherent in that. Now, does the system work? Of course it works. Otherwise, Visa, MasterCard, Amex, and Discover wouldn't be in business. And, people wouldn't be flying for free around the planet with their miles. But there is a risk in it, and that risk needs to be assessed. And so when that risk is assessed by the right partner, then you're in good standing, right? You've got a good foundation underneath you. It's like anything else. You put a good foundation on a house, and the house will stand for a lot of years. Not a bad house or not a good foundation, and that's what happens. It can falter. So.
And how do it just seems to me that it seems somewhat random, like when they assess that risk, certain people that probably have a better payments history than me are approved or not approved and shut down on Stripe, and I am not. So what's going on there? Is it just like algorithms in the background reading stuff?
Yeah, I mean, that's a really, really good question. I think that's the billion-dollar question, right? How is the algorithm assessing? There's no way to really know, right? Like none of us works for Stripe. But I've talked to a lot of people in the payments industry, And the one thing that people sort of know, it's going to sound bad to say it this way, but this is a term I'm going to use. The one thing that people sort of know under the table is that Stripe, like any business, is also in the business to make money.
Yeah.
So if they sell you a 2.9% rate on the front and they're processing Amex Black cards all the way on the back end, they're not making a profit. They're losing money on that account, right? Well, no business owner wants to lose money. So it doesn't make sense to keep an account that you would lose money in payments. It's a portfolio, right? And so, when we went through all that subprime mortgage lending stuff and, the early 2000s, there was a lot of just bad debt and they're not making money. So it's within reason to then say, if I've never had a chargeback, right? I've always delivered my product. I've run lots of money through my account. I am paying my bill. It's a logical next step to say, maybe they just weren't making money on that account. And that can happen. If in payments, I go price an account and I say, hey, I'm going to only charge you 2.9%. We'll choose theirs. But a card not present transaction automatically goes to 3.4, right? And then you have these other risk factors that pop in, then that transaction can cost the bank more money to process than they're charging for. Same as if you charged $1 for a gallon of milk and paid $2 for it, right?
Yeah. Okay.
So sometimes we don't know. And broadly speaking, again, because none of us are, work for Stripe, and I'm not disparaging them, right? Again, businesses change business strategy all the time.
Yeah.
The difference is, if they never had a chargeback, if there was never any issue and lots of money was running fine, that's the logical, in the payments industry, when people talk, that's the logical next step.
Yeah. So you're saying potentially too many Amexes were run on that account, and because Amex charges a higher fee, they're just not profitable.
Yep. It's So in payments, right, you have a number of ways you can price things. You can do interchange plus, you can do tiered pricing, you can do flat rate pricing, which is what Stripe and PayPal and Square do. But other providers do flat rate pricing. You can do dual pricing, which is what we're really popular for in the high level group. And we'll talk about that later. But in an interchange plus model, what that model is saying is, I'm going to price you at 0.5% above interchange. That's in the best case scenario, right? And it's not, it also is able to take into account all the cards that could potentially come through. Because if the interchange for an Amex is 2% and for a Visa it's 1.8%, I've just added that 0.5% to the 2% versus the 1.8%. Does that make sense?
Yeah. And interchange is just how much the bank is actually paying for that transaction.
Right. So in its simplest terms, that's exactly what's happening. So if an interchange rate is, we'll just call it 2% even, and it costs, and an Amex card comes in and it's 2.5% to process that, and I've only charged another 0.5%, then I'm flat on that. There's no profit, right? In math simplest terms. But if I charge 1% above interchange and it's now 3%, and I only had to pay Visa and MasterCard 2.5%, then there's profit there. Make sense? Mm-hmm. So that's why interchange has become, is really popular, and has been for years. You're going to get, if you find a good provider, a good bank to work with, somebody that will resell it to you at a good deal, then you're going to get really, really good costs that way.
Okay.
Besides what we do.
And that means that they have it's fixed, but it's fixed on the markup, not on the actual fee.
Correct. Yeah. It's fixed on the particular type of card and the way the card is run in the transaction. So in person, right? Swiping a terminal, enter a PIN debit, or over the phone. Those have two different price points as well. But it fluctuates because interchange is going, okay, interchange is here. They added 0.5%. We know it's this card. So interchange is really here. We've already added the 0.5%. It's profitable.
Yeah. Okay.
See how sexy it is? I mean, geez.
Yeah, I can't believe you get to talk about this stuff all day. You start discussing it and your wife's just like, this man.
My kids ask me, what do you do again? I'm like, I don't even want to try and explain it. I tell, you've known me long enough. I like to have fun. I have a pretty good
Yeah.
sense of humor. I tell a lot of clients, I'm like, listen, if you have insomnia, just like Google interchange table and try and understand it, you'll go right to sleep. So,
Love that. Love that. Okay, so we can take our chances with Stripe. Sounds like,
okay.
some people will be completely fine, potentially their whole life.
Could
Some
be. Yeah.
people, that's not the case. And your thing, by the way, reminds me of, I heard once before YouTube came out with their we can monetize any video, used to be you couldn't really run ads on unmonetized channels because they didn't turn ads on, or if they hadn't had ads on. And I heard a very popular YouTube creator say, the minute I turn ads on, my videos just like blew up.
Yeah.
And he's like, YouTube's never going to come out and say, we spread videos more that make us money more
Right.
than videos that don't make us money.
Right.
But like anecdotally, that seems to be what's going on. Kind of the same thing with the back end. Yeah.
It totally is. And that's honestly, listen, that's how business works. Most people that are probably going to watch this, right, are in marketing. They understand lead magnets. They understand buying ads to break even on the front end so they can sell something high ticket on the back end, right?
Yeah.
I mean, it's just a loss leader. So if you're a Stripe and you say, look, we're going to create a system that lets us flat rate price and then adjust as we see fit to generate profit by adding costs for different features, right? They charge for invoicing, they charge for recurring, and they charge for a couple other things. That increases the rate that they can charge. Then they can be more profitable. But on the front side of that, if they make it so simple for literally 20,000 new businesses a month to start taking payments, that's their loss leader, right?
Yeah.
And it makes perfect sense. Why not make it easy for people to have access to your software? I mean, I've also said to people, like, it's like the American Idol. Let's let everybody come sing a song and we'll just pick the best ones.
Yeah.
I mean, it's really brilliant when you think about it.
Yeah.
So it's not to say, again, that they're a bad technology. It's just to say, are they the right fit for you?
Yeah.
That's all.
So what are the other options? Because when I started my business, it was like, yeah, sign up for Stripe. Like, and then I remember a couple months later talking to my coach at the time. I was like, they seem to be taking a lot of my profit. Like, he's like, well, you're paying for really secure payment processing. So like, it's just part of the game. But like, it wasn't like, go sign up for Stripe or do this. It was literally just like, that's your only option.
Yeah.
So let's say I'm rewind 5 years, I'm starting my marketing agency. What would you say payment processing wise are options for beginners or switching as well?
Yeah, it's a good question. So, and it is true. I mean, listen, they've done a brilliant job, cornering the market on, hey, just choose us, right?
Yeah.
But payment processing, I believe Stripe's been around for about 10 or 12 years, if I'm not mistaken. Credit cards have been around, if I'm not mistaken, since the 50s and 60s. So, 50, 60 years, right? So it's not a new game in town. The way it works is this, and Stripe is certainly very large. I think last year they did like $1 trillion in volume. But if you look at the second largest processor in the US, by the way, me and some other guy that you talk to, we're not processors. We resell payment processing. The difference between me and somebody else is I also have a software. We'll talk about that in a minute. Yeah. But in general, there's some main processors in the US. First Data, TSYS, WorldPay, Vantiv. These are the names of actual processors.
Yeah.
They're the ones with direct connections to the card brands, right? So the second largest one in the US 2 years ago did $2 trillion. So they're double the size of a Stripe, right? But the way it works is you have a downline, if you will. It's not an MLM, but we'll just use the downline. So you have the processor, then you have ISOs, wholesale ISOs, retail ISOs, and then sort of resellers. Think of like real estate, right? And if you go to the lowest level of real estate, you have a real estate agent who's licensed, but then they've got to work with a broker, right? And the broker's licensed with the state, so on and so forth. Payments are not dissimilar to that. So from processor to your ISOs to your resellers, You could literally talk to 10,000 different people in the US who could resell you payment processing.
Mm-hmm.
And then everybody in that layered system has some type of cost that they add to it, right? And so if you were just getting started and somebody said, oh, just use Stripe, my advice would be, you could literally talk to your bank as well. Now, your bank's not going to be the best price, but they can do it. And because you have merchant banks, they're called sponsor banks on the merchant side, because you have that part of the infrastructure, you then have technology, which is gateways, people like myself. So there's gateways, there's softwares. So there's all kinds of things that you could do as a business owner to connect to payments that have nothing to do with Stripe and never will. And in my experience, are infinitely more sustainable and secure, like nearly impossible to lose an account. So that's what I would say to people. Talk to somebody, go to the bank, talk to them first. You can literally look up merchant processor and then all of a sudden your Facebook feeds, everybody that's running ads for it. But
yeah,
that's who you would talk to.
Okay. And does that include something like NMI or authorized.net? Is that the same thing?
Nope. Those are gateways. Although authorized.net can help you get a merchant account, but it's widely, a gateway, widely considered just a gateway. NMI is the same way. Authorized.net's older, and NMI's, been around for 20 years. I don't know how long authorized has been around. But gateway technology is technology that is passing data back and forth between your customer's card and that bank and your merchant account and your bank. That's what's happening in a gateway. It's literally a gateway, just information passing back and forth that says this person with this Visa card wants to spend this amount of money with this merchant at this sponsor bank. Yeah. And then the two banks communicate and transfer money in its simplest explanation.
Okay. So, of course, the only question going through everyone's head right now is not what's the difference between a gateway and whatever the other words you said. They're like, which one's going to be cheapest? And maybe some of the more experienced people are thinking, which one gives me the less risk?
Yeah. So let's start with the risk question. A fully underwritten merchant account makes you the most secure.
Okay.
One, because they're vetting you up front. They're saying, give us all this information and application. You turn in documentation, bank statements, that kind of stuff. And they're assessing the risk right up front. And if they're willing to underwrite that account, sort of like, you go apply for a home loan, right? But less time. They've ran through their charts and their algorithms, and they said, this is an acceptable risk to us. We're going to extend this amount of processing volume. Let's approve them. That is the most stable that you can get when it comes to payment processing. The only time I've ever seen anybody lose that type of account is for two reasons. One, they legitimately commit fraud, like they just don't deliver the product.
Okay.
And two, they don't pay their bill. So in traditional payment processing, the side that I'm on, you have hard costs every month to have your account. That comes with a bill. It's not very big. It might be $25 or $35 depending upon where you're at. But if you don't pay that bill, it's like not paying your electric bill, right? At some point, the electric company's like, hey, I sent you notices, you owe us money. Okay, I'm not paying it. Okay, we have to turn it off, right?
Yeah.
Now, the other reason that that's super secure is you can keep adding merchant accounts to your business. So just like I can add an Amex card and a Visa card and a Discover card, right, and a MasterCard to my wallet, right? Then I've got money siloed in 4 different ways, so that if I were to reach a limit on one, I could move to the next one and keep spending money. Obviously, debt-wise, don't do that. But merchant account-wise, that's what we want to do is, if you're doing enough volume, I typically tell people that are doing, 50,000 or more, it's a really, really good idea to have at least 2 merchant accounts. Because 2 reasons. One, it's already virtually impossible to lose 1 merchant account, which means it's infinitely less possible to lose 2.
Mm-hmm.
Plus, I can increase my capacity. So if we think in the world of internet marketing, where it's really possible to scale a business really quickly, which means a lot of sales coming in same day, same week, same month.
Mm-hmm.
In payment processing, those tend to set off triggers, right? Because a normal business can see this steady growth, right? You open a restaurant, you're going to see average sales, and then you can see steady growth of sales if the restaurant does well. You don't typically see a launch of sales and then the restaurant just goes vertical.
Yeah.
Whereas with digital products, because you have an infinite ability to deliver them, you can see that skyrocket, right?
Yeah.
So that increases risk. So by adding a second account, I can then make the entire process more scalable. Adding a third and fourth obviously just keeps adding to that.
Got it.
So that's the most secure version. What was the first part of the question? You forgot.
Is which one's the cheapest?
Which one's the cheapest? So this comes down to chasing a price or using a strategy, right? So in payment processing, you have what we call traditional payments, which is the interchange plus we talked about earlier. Then you have different strategies, surcharging, cash discounting, dual pricing. Those are strategies where the fee is incorporated into the cost, but how you do it matters. In interchange, literally everybody is racing to the bottom. Literally everyone, right? You'll get on a phone call with somebody selling the interchange plus, and they'll literally try to undercut somebody by a nickel. Because at volume, that makes a difference, right? So then you go, okay, if I can undercut everybody a nickel, then I can sell a whole boatload of volume. I can build my portfolio, and over time that generates residual income. So in interchange, it is a race to the bottom. It's just literally who can give you the cheapest rate, and it's cutthroat. If you look at cash discounting, surcharging, and dual pricing, of those three, dual pricing is not only the most compliant under constitutional law, under the Durbin Amendment, but it's also the most frictionless in payments. So if we think about surcharging and cash discounting, surcharging is the one where you go to Ticketmaster, and by the time you get to the end, the ticket was $30 when you started, and it's $100 when you finish. They've added all those convenience fees and service fees. All that stuff is a surprise as you go through the process before you check out, right?
Mm-hmm.
That's surcharging. It's not legal in all 50 states. Is effective. It's effective. It works. Then you go to cash discounting. Cash discounting is where you need to have two prices displayed. Most people still don't do it compliantly. And the price displayed is the credit card price. And then when you get to the counter, if you pay with cash, they'll surprise you with a discount. That's the opposite of surprising you with a surcharge, right? And people are typically pleasantly surprised that they get a little bit of a discount. Dual pricing means there are two price points for every product, and they're both displayed at all times, right? Or available to you at all times. So think of a gas station, cash or credit, right? That's dual pricing. So in those three models, again, dual pricing being the absolute most compliant, most frictionless, that will drop your costs 50 to 90% over somebody like Stripe. My top end clients, those that are doing over 100,000 a month in volume, they're saving 95, 98% total cost. Meaning, I'll give you an example. I've got a client that does 300,000 to 500,000 a month. He'll save $9,000 to $12,000 a month in cost. His bill might be $200, right? How he does it in the dual pricing, what we set him up with, makes a massive difference. If I surprise somebody at the end with an extra cost, that's friction. If I don't surprise them and the price is the price, however I display it, there's no line item that says, oh, by the way, I've got a convenience fee, or I'm surcharging you, or, your daughter's hair is purple, right? It's an extra cost. It's just the price of the product for a credit card. And then if they switch over to pay by ACH online, it's just the price of that product. Just two different prices.
Got it.
So when you think about pricing, what I do a lot of talking about is educationally the strategy of how you're doing it, right? So then people will go, yeah, but I'll just increase the price of my products. I mean, that seems simple enough. Mm-hmm. Okay. You're really just doing circular math at that point. You can't ever catch it, right? So in traditional pricing, interchange plus, tiered, even flat rate pricing, it's all based on your total volume as a merchant. So if you say, look, I'm going to add 5% to cover it, and you're doing $100,000 a month before you add that 5%, you're paying a percentage, basically a tax on the $100,000, right? Mm-hmm. If I now increase it to $105,000, well, now I'm paying a percentage or a tax on the 105, not 100. Yeah. So every time I increase my rates, I'm now increasing what I'm being charged on the total volume. Does that make sense?
Yeah.
So
Um,
you do have to think about it strategically in what you're doing.
yeah, and I'm glad you brought that up because I mean, it seems on the surface like that's, okay, I could go through this whole thing, sign up with Numeric, which we'll show you in a minute how that works. But I think I'm scared it's going to scare my customers away. I'm worried about
Mhm.
XYZ. What if I just, I'm mad about the payment processing fee, so I just add a $30 payment processing fee to everybody, and you know that's
Yeah.
fine. Sure, you're technically making more, but you're also paying more in processing fees. So I appreciate that perspective. I want to
Yeah. You're
share,
chasing the math. That's all you're doing is you're chasing
yeah.
the math.
I want to share this tab that you have on the Numeric site so people can see how the system works and see that the dual pricing in action. So
Yeah.
let's say I come through a payment form and I submit my info here. I select the recurring product. I don't go for the bump. I have the option to select check or credit/debit card, and they will see the price change here based on which one they select. Correct?
Correct. Yep.
And another common thing I'm sure you hear here is, oh wow, like would people really pay by check nowadays, especially for SaaS or coaching or whatever? Like everybody wants the credit card points.
Yep.
What do you say to that?
Yeah. So so people do choose to pay by check.
Mm-hmm.
Depending upon the merchant, it might be 10%. Most merchants, it's still below 5% because everybody does want their miles and their points.
Yeah.
Most of the people that you and I talk to are a business to business transaction, which means it's a business credit card as well, which means it's business expense, which means they're going to get more miles anyways. But yeah, we still see a lot of people pay by ACH, I think last month total volume was right around, it might have been 15% last month, still less cost to the merchant. And it's
Okay.
a cash sale, right? So it ends up being a cash sale, harder to charge back,
So
much
out
harder
of
to charge
a
back.
hundred sales, 15 selected, hey, I'll pay by check.
Yeah. Yep.
And if
You get the numbers off the top of my head.
if you're getting 15, like I have a couple failed payments right now that I'm not going to say I'm chasing them, but I'm just dealing with them.
Sure.
And that doesn't really happen with ACH, if I'm not mistaken.
I mean, it can. Don't get me wrong.
Okay.
People
This is the
frequently
part where
don't have money.
you just tell
Yeah.
us it's all sunshine and rainbows once we sign up.
No, I'm a transparent guy. Listen, people frequently don't have money. Oh, I got the money, right? What's the old cliche? The check's in the mail.
Yeah,
It
yeah.
happens with bank accounts, not as much, but it happens with bank accounts where the money's not there.
Okay.
In my experience, people don't really know how much money they have. They don't know how much is on their card. They don't know how much is in their bank account.
Yeah.
They think it's there, but they also aren't paying attention to the cycle of bills, right? So sometimes it could be, honestly, do all your bills hit at the 1st of the month, the 15th of the month, the 30th of the month, and then when are you buying stuff, right? So it still happens with ACH. Money still moves the way money moves, and people still oftentimes just don't know how much money they have. It's even more both credit card and ACH. So take note of this, everybody. It's even more prevalent around the holidays, right? Because people are spending more money to buy gifts. They don't necessarily know if the payment hit, so they can spend more money if there's capacity on the card. It's human behavior, quite honestly.
Interesting. Okay, so 85% of people elect to have a fee assigned, and that fee, if I'm not mistaken, is depend if it's an Amex, it'll be a little bit higher. Am I wrong?
Now, the way we do it, it's a flat rate for the end buyer. So they never will
Okay.
pay more than the percentage that we add.
Okay.
And we do that for two reasons. One, it maintains the merchant bill, right? So your bill is going to be fairly consistent from month to month. Like I said, I've got one client in particular that I'm thinking of does $300,000 to $500,000. His bill's never really more than $200.
Wow.
Yeah, I mean, it's super powerful, right? So, but in Interchange Plus, it can fluctuate quite a bit because you could have months where your higher end debit cards and lower end Amex Black cards, right? And it can go like this. So,
Yeah.
So anyways,
So let's say I sign up tomorrow for Noomerik. Obviously the transferring all the current people I have is another conversation, which I believe you have a good solution for.
yep.
But how do we just decide what the percentage markup is? It was like $6 on $165 product there, if I wasn't mistaken.
You guys don't decide. We price that.
Okay. Based on the
yep.
risk.
Well, yeah. Well, we base it on what we know to be fairly true about spending habits, right? Visa and MasterCard are still the most widely used cards out there. They're a much higher percentage than an Amex card. Like Costco doesn't even accept Amex, right? It's just a higher cost for folks. Mm-hmm. And so we price it at what we know to be fairly accurate for 95% plus in the transactions, meaning we're willing to take a risk on, 5% of the transactions always being the highest possible cost card, right? Your Amex Black card, right? I keep using that one. And don't quote me on that. I mean, I haven't memorized the interchange tables, but the point is we price based upon what could come through, right? So in business to business transactions, they tend to be business cards, which means they tend to be a higher rate. Believe it or not, Stripe is actually averaging over 3.5% these days. It's not 2.9%, right? So, yeah, I mean, I'm looking at statements every week from Stripe, and they're never 2.9%, like ever.
Give yourself a raise, everyone.
Yeah. I mean, that's just the reality. Again, it's a business, right? It's a business. Yeah. They have the right to charge what they want to charge. If somebody finds that acceptable in the business, I'm not saying don't do that. I'm just saying the more you know your business numbers, right? Everybody's like, well, it's just the cost of doing business. I'm like, so are taxes, but I still want lower taxes.
Yeah.
I'll go to the ends of the earth to find the most amount of deductions.
Yeah.
I'll talk to a tax strategist, not just a CPA that's just going to fill out the 1040, right?
Yeah.
So we assess the percentage on our side based upon what we know to be true industry wide on what we think is going to come through.
Yeah. So that means like this example you keep bringing up of the person that does 300 to 500K. Let's say they do 400K in a month. And you're saying that their normal bill from Stripe would be like 10K, let's call it. And they're still kind of does that mean they're actually collecting like $410,000, but the processing fees are just kind of offsetting it, or what does it end up looking like in terms
that's
of
correct.
Okay.
So we're collecting a total amount, right? So if we're adding, let's just use easy math. If it's $100,000 and we're adding 3%, then we're adding $3,000. The difference in how our merchant accounts are set up to use this compliant way is when the customer pays that total amount. Now let's use a smaller dollar amount, and it's $100, and now it's $104, right?
Mm-hmm.
The $100 goes to the merchant, and the $4 goes to Visa and MasterCard, right? That's how we do it. We actually escrow the $4.
Oh, wow.
Stick it in a separate account. So the merchant, instead of at the end of the month getting a bill for the $4, they might get a bill for a nickel, right? That's not exact math, but that's how it works. So $100 goes to the merchant. There's a few other fees in there. So just don't take it as exact math.
Yeah.
And then the $4 goes into an escrow account. The merchant gets a statement at the end of the month that says, these are how many fees are owed. These are how many fees we collected, right? As part of the total volume. This is what you owe. So I've got statements on my site that show proof. I need to update them. They're more than a year old, but these people are still processing with me. That will show you, $100,000 came in and it was, $2,800 in fees, and the merchant owes $60, something like that.
Nice. So you mentioned you also have a software with Noomerik. What does that software do? Yeah.
So Noomerik as a company is basically a payment software company. Stripe is a payment software company. PayPal is a payment software company. So we have relationships with merchant banks. What our software does is facilitates transactions as a standalone software, similar to what Stripe does. Again, the biggest difference, of course, is merchant banks versus a sub account of a sub account for a merchant, right? What Stripe and PayPal do. So we're similar to a gateway, although we have gateway technology that we resell inside of our system. So our software lets you create and run an entire business, products, payment forms, invoices, quotes, contacts with their secure payment data. All of that lives inside of our software. Mm-hmm. And we're both integrated into GoHighLevel. In fact, the documentation that just came out on Friday of last week, my team already is 98% done with an even deeper integration than we were already at. That's so great. It's a standalone software. You could use it inside of GoHighLevel, which is obviously what we promote and love. But you can also use it outside of GoHighLevel. You could use it on any other platform, really.
I see. And you were mentioning to me like a while back, you had I think it was a dentist friend that you were like, hey, we could save you $5,000 a month. And so you set him up, you get him underwritten by a merchant account, and then he integrates that with whatever he's using to process payments, right?
Yeah, in the medical world, it would be his EMR.
Okay. Well,
that's correct.
Very cool.
So in that way, it does mean is the other system an open system? A lot of EMRs are not open systems, but yeah, I mean, I'm not going to say the name, but everybody knows the popular other funnel software out there. Mm-hmm. I mean, you could technically integrate it into that. Okay. So, they're open. We don't have an open API yet. We're working on it, but because you can get transactional data out of our system, you could still use it anyplace else, because you can know the second a card is paid and ACH is paid. You can know when things are settled. Like, all of that data is available to you as a business owner.
I see. And then if I switch, you take my Stripe recurring and you can plug that in, right?
That's correct. Yeah. I mean, let's clarify. So Stripe will help you export your payment data, right? John Smith with its Visa card. What they won't export is John Smith was on product A that's $100 that gets billed on the 15th. They'll cut out that second part, right? So you can get John Smith and his Visa card over. We can import that data securely. We have a really good process where it just takes a few clicks on our side, a few clicks on the Stripe side, to get all that contact data with the cards imported. Then you just attach John Smith with his product A and Noomerik now, right? Nice. So, I mean, I've had people switch over 600, recurring subscriptions to our system within a day or two.
And is it sort of like all the old people that were on the old system just keep getting billed and we eat that cost, and everybody new gets the additional fees, or does everybody that you switch over have to get the additional fees?
So that's a business decision. So what I tell people is this: we have migrated 200 people off of Stripe, no problem. Mm-hmm. Not everybody has switched over their subscription data. Some people just choose business-wise to do something, they do whatever they're going to do. What I tell people is this: I don't care what your product price is, because I've seen it in the data. It does not matter what your product price is. When you communicate the right way to your clients what you're doing, the majority of them will be fine with the price increase. So that means you can move them over and put them on dual pricing, because you're still going to give them the option to pay by ACH if they'd like to switch to that.
Yeah.
I have clients that have $3,500 products, $5,000 products. As soon as they say, hey, we're switching our billing system, we just want to let you know, if you're okay with moving from X price to Y price, there's absolutely nothing for you to do. Nothing. Take this email as notification. You'll notice the new price next month. However, if you'd like to keep price X, just let us know, shoot us an email back, and we'll collect some ACH information from you, and we'll switch your billing.
Nice.
It's like 5% of the people or less will switch.
I see. And everybody else is fine with an extra $5, $10, $20 a month.
Yep. I mean, if you take GHL's highest product, right, the $497, it ends up being like $518 and change.
Yeah, that's what I get billed from them monthly.
Yeah, like most people are getting at least another $20 a month in value from you, right?
Yeah.
At least. So, so generally the end consumer will do the easiest for them and what's best for them. Always, right? You and I will always make the best decision for us when we go out to dinner. I'm just going to put it on the card.
Yeah.
Right? I didn't bring $100 bill with me. I'm just going to put it on the card. Or if I'm paying the electric company, I just set it up to do ACH.
Yeah.
Right? It's just how we operate as human beings.
So then the other question I have is rebilling and reselling. I believe when we talked, let's tackle reselling first. When we talked a while back, your idea was for, like, if I have a SaaS with 500 customers on it, they can also use Noomerik under their brand.
Correct.
And you can, I as the software owner can get some of the payment processing juice income
Correct.
back. Is that fully built out?
It is built out. You can come to our login page, become an affiliate, create an affiliate link. You could call it Keaton's link, right? It could be admin.noomerik.com/Keaton's link. Hand that out. When people sign up, you literally will earn a residual income on every sale your customer makes, right? So think about the power of that. If you yourself were doing, let's say, $10,000 a month, but your entire clientele was doing $10 million a month, right? You're making a current income. Obviously, there's nothing wrong with it, but you're making a current income on whatever subscription they're paying for, right? A recurring product, whether that's coaching or a SaaS or whatever.
Yeah.
But when you add Noomerik and you let us help your clients, serve them the same way we're going to serve you inside of the software you're already providing them, then you can earn a residual income on every sale that every one of them makes for as long as they process with it. So you've taken, say that again?
It's like being QuickBooks. They bill you the subscription, but they also take a piece of every transaction.
Yeah, it's like maybe a better example would be being the Apple App Store.
Okay, nice. Yeah.
I mean, except for your client isn't paying it, right? It's just their customer is, by a normal amount of transacting business. We just said, thank you for being a referral partner with us. This is what we appreciate you for. Here's your check. Yeah.
Nice.
Residual income's fantastic. Like, portfolio income is fantastic, right? I'm not bragging. I don't have a jet. I drive a regular car and live in a regular house. What I'm saying is when you're already offering somebody a solution, right? Your SaaS, then offering, and SaaS is like, Sean's so great about this. SaaS is already sticky, right? It's so sticky for the agency. You run an agency, you know what it's like to, constantly have to sell ads and your churn is higher. When you add SaaS, churn goes dramatically down. Now add payments to it. It's going to go down even further. Like, it's going to get kind of ridiculous because now everything is that bundled option, right? That Allstate was offering you all those years. Bundle your home and auto, right? So when you add that, and then you're already helping your client grow their business, you're literally helping them put more money through their business. You therefore are generating more income. And the last piece of this, I probably should have said this first, is when they do dual pricing, they'll likely save more than enough money, depending upon where you're priced at, more than enough money to actually pay for your services. So you then become free, right?
That's pretty sweet. So
obviously I'm biased. It's my company. It's our product. But if you really think about, and the SaaS, the SaaS people on high level are really great about adding value. I mean, I think the leadership at high level has done such a good job at portraying how to do that. And so then everybody has taken that as not their marching orders, right? That's not the right term, but it's taken that sort of like, this is really great. We're just going to keep adding value and adding value. You add one more piece to that, which has got to be done anyways. Right? I like to say to people, people will spend weeks and weeks, if not months, building a website or building out the right workflow in high level. If you'll just give me a couple of days for a merchant account, you'll never worry about money coming in terms of the actual flow of money. It just won't ever turn off, right? So what I'm getting at is by adding that extra layer for your clients and going, by the way, we can help you take payments too, and it's going to save you all this money. I mean, sometimes it becomes a no-brainer.
That's cool. So the one thing I didn't understand that you said there was the affiliate link. So if I have like a custom menu link on my sub accounts that says payments, and that's the affiliate link, or how? And
Yeah, you could do it that
each of
way.
my customers has to sign up with you
You could
directly,
actually
right?
do it that way. Yeah.
Okay.
So what you could do is you would come to our site, you would create an affiliate link, Keaton's link. You would put that into a custom menu link, and you could say, merchant services or payments or whatever it is you wanted to put in there. They would click on that. That would populate your unique form that they would then fill out to start the application with us.
Smart.
And then we would know they belong to you.
But it's
That's
all
something I'm gonna
still
say. Yeah,
Noomerik branding. It's not my brand, correct?
that's correct. We can white label
Oh,
it.
you
So you
can't?
could, yeah, you could white label it.
Okay.
That's
For an
very
extra
true.
fee.
I'm not there yet. I'll just
Okay.
be nice. Yeah.
Yeah.
I know I should probably charge for white label. I'd rather just help people, if I'm being honest. I know that sounds completely cliche, and some people are like, oh, gag me, right? No, truly, like, I'd rather just help people have a really secure foundation to have payments come through.
Nice. Amazing. Okay, so rebilling.
Yeah.
What about text and email and AI and WhatsApp and all that?
Yeah. So if you think about rebilling, right, there's two ways to do it. There's the high level way, really smart wallet, right? Somebody just funds a wallet, and then that wallet just measures usage. At the end of the day, though, your card's still getting billed for usage. You're just billing somebody else, and then they're making up the difference.
Yeah.
If you do it the right way, then you don't pay. You make a little bit of money. Essentially, we're doing the same thing. The only thing we're not doing is tracking usage. Now, that triggers something on the brain. You've got to be kidding. We're not tracking usage. Everybody's a little bit different. In my experience, it's not that hard to track usage. I've got clients with more than 130 SaaS accounts, and they track it just fine. In most cases, they're not finding that people are really going over what they're reselling. So, for example, if you said SMS is a product, which it is, in my system, you would just give it a product name, a product price. Somebody would pay for that, and you would just bill them every month for that same price.
I see.
If they go over, you could recharge them. If they go under, more profit.
Yeah.
So makes sense?
So it'd be like 30, like, hey, to add on SMS to your high level account, it's $30 extra a month.
30 extra bucks a month, 40 extra bucks, whatever you want to charge for. That's exactly how you would do it. So it also makes it unlimited in terms of all the other things that you want to add on as features, right? You could literally add on anything. The other thing is because we built the system the way we have, if you did want to monitor usage, and let's say you had somebody that did consistently go over, you could either bump them to the next subscription amount, right? So let's say you started them at $25 a month for 2,000 texts, or up to 2,000 texts, and they consistently sent 3. You go, okay, we're going to bump you up to the $50 a month package for the next month and moving forward until we see the usage go back down or whatever, right?
Where does that actually live in the app? Is that another like custom menu link sign up for this, or is it a bump on the order page?
It's a product in our system, so it would be a bump on the order page. Yeah.
Okay. So
and you can manage it in subscriptions.
I see. So if I'm the on the checkout page signing up for Josh's SaaS, it would say, okay, $297 a month for the essentials plan, and then add texting for $30 a month, and I just select that and sign up. Okay.
Correct.
Cool.
Yeah. Versus now, I think they have to log into their account. They have to add their credit card, right? The customer actually has to go in and do that.
Yeah. Okay.
So in this case, you could do it all in one checkout form. Then you have it on file.
Got it. And sort of same thing. You could just increase your prices by $30 a month and just.
I mean, you could.
Yeah.
I personally like the individual line item, right? Here's what we're servicing you for. This indirectly speaks to chargebacks, right? Chargebacks oftentimes happen because people just misunderstand, right? So chargebacks are created because somebody signed up for a free trial, didn't know they put their card in, and then they got charged and they never used it, right? Or a chargeback happens because you sold your product as Rocket X and it came through on the description as, John's ABC company, because that's how he originally set it up.
Yeah.
This misinformation, that's such a widely used term, just misunderstanding the communication between merchant and customer can cause a chargeback. So I like to have things line item. You're paying for up to this many texts, this many emails, this much AI, right? Because now I can say I am delivering each one of these products. I've got a line item, again, because GHL's done a good job in all that reporting. I can see that, right?
Yeah.
So now I don't just have, oh, by the way, it went from 500 to 530. Well, what am I getting inside of that? Well, you're getting texting too. Well, how much? Well, we kind of determined that, right?
Yeah.
Now I've got a line item that says it.
I see.
Think about like a medical insurance bill. Like you got a provider, and then you've got an office fee, and then and it's all line item. I was incredibly detailed.
Yeah.
And so that prevents a lot of things, right?
Yeah. Okay. The other thing I want to ask you about that I get questions about a lot of the time, and I actually tried to write out a whole YouTube script on this, and I didn't feel like qualified enough, so I haven't made the video. Options outside of the United States for rebilling, for Noomerik, for any other payment processing that you're aware of.
Yep.
That just tips and tricks for folks outside the US.
Well, I will say we're just turning on Canada, Australia, and New Zealand inside of our software, so you could come to us for those 4 different countries. UK currently in a little bit of a limited format. I'm still working with some providers there to get it more robust like it is in the US and in Canada and whatnot. I'm also working this week on solidifying the EU, like the entire EU.
Oh, wow.
So technically, I'm not promising this today, but technically probably by the end of the quarter, we'll have the entire UK and the entire EU as well available inside of our software.
Nice.
Which of course would then all filled in that rebilling conversation we just had.
Yeah.
Yeah.
And sorry for Switzerland, you'll just have to wait.
I mean, yeah,
they're a whole different beast.
Again, it's going to sound cliche. I absolutely hate it when I have to tell somebody I can't do their country. I just don't like it.
Yeah.
Not because, I think, okay, let's open that country up and make all this extra money. It's not that. It's because I know people want a solution that's outside of what's currently available.
Yeah.
Just would like to provide it.
And are there any differences, or will there be any differences in Noomerik in these other countries?
Yeah, there will be. The pricing's going to be different because they can't do dual pricing. Having said that, the U.S. is the most expensive place to get payment processing, period. I mean, it's just more expensive than everywhere else. So the rates outside of the U.S. are going to be better than Stripe anyways. Now, they're not going to be 50 to 90% better, but they're probably going to be between 10, 30, maybe 40% better, just depending upon the month. But they'll be better, and then again, more secure, more stable.
Nice. And to just those that maybe aren't able to get Noomerik, are you able to provide any other options you know of outside the U.S.?
Typically what I'll tell people is if you're not in a country that we're currently serving or we will be serving here fairly soon, what you want to do is actually go talk to a bank. Like, I don't know what the banking system is like the US. I probably should. I've traveled a little bit around the world, but if you go into a bank and just start asking questions there, oftentimes you can find somebody doing something related to what you need. Meaning, is it going to plug and play? Let's talk about the GHL community. Is it going to plug and play in GHL? Maybe not right away, but at least it's going to get you to be able to take payments in a stable, stable, more cost-effective way. So, as an example, I traveled to Pakistan in March, and obviously I was there. I spent money there. I ate meals there, and I watched what they were doing. They have point of sale systems. There's stickers on those things that say what bank it's from. So that's what I generally will tell people is you got to do a little bit of research, start with your bank or a bank and talk to them about merchant services. It's pretty universal about how it's discussed, the terms. So that's where I start.
Even though it may be in the US, it may be more expensive to go with a merchant bank.
In the US, it's going to be, that's going to be your most expensive route. Well, sorry. In the US, payment processing in general is just the most expensive.
Yeah.
Globally. Yeah. If you're going to compare. Yeah.
But merchants versus Stripe is going to be more expensive, but more secure if they're not using
actually, a merchant service in the US is going to be priced better than Stripe.
Okay. All right. Yeah. I misunderstood that earlier.
I mean, if you go to like B of A and you go to your banker and you sit down at their desk, maybe it's going to be more expensive than Stripe or comparable.
Okay.
Again, it's like if you go get a mortgage and you go to Wells Fargo, you're not going to pay the best rate. If you go to a broker and they can send it to 6 different people, you're going to get a better rate, right? Yeah. So it's very similar.
Got it. And I always tell people, like, if you can't rebill, you can't even like do the subscription via Noomerik or Stripe, just process the payment somewhere else, and then Zapier the automatic sub-account creation from that payment, or tell them they'll get it set up like it's in a day or two. Obviously, you'd like for it to be immediate, but it doesn't have to be connected to the payment processor for you to sell sub-accounts and have subscriptions. Like, think about it like when I had a marketing agency, $2,000 a month, processed in QuickBooks also got you a sub account, but they weren't talking to each other at all.
Right.
We just set them up manually.
Yeah. I mean, money's coming into the business, right? That I tell people that all the time. You just want money coming into the business. If you can make sales and deliver your product, make sales and deliver your product. If you've got to get paid through something that's not directly integrated, obviously efficiency is the name of the game. We all want to be more efficient. But having cash flow in your business is paramount. I often will say this to folks. I don't care how good your marketing is. I really don't. We're all good marketers in HighLevel. Okay, maybe not everybody, but most people in HighLevel are good marketers, right? You can have the most amazing marketing on the planet. You could have your calendar completely full, the best closers. Everybody signs the document to buy. But if you can't take money in your business, none of it matters, period. Yeah. Right? Even being able to barter would be better than not being able to take payment, because at least some form of payment is coming in. So if you can take payment. Then let's figure out the efficiencies, right? Yeah. In the beginning with HighLevel, you couldn't auto launch, or you couldn't attach a snapshot, or there were a lot of things that had to come along that they ended up filling in the gap for really well, right? But in the beginning, sell the SaaS, grow your business, sell the ad accounts, grow the business.
Oh yeah. Just to close out here, how many people are on Noomerik right now? How many businesses?
Yes. So we've had several hundred approved. It's an interesting marketplace. Not everybody moves right away. Right now in the software, we're over 700 users. Amazing. So yeah, I mean, we're growing. It's nice. Mm-hmm. I'm like anybody else, so I want to grow faster.
Yeah.
I want to help more people.
I mean, you get tagged probably 12 times a day in the Facebook group from what I can see.
I mean, I'd love it if I got 12 times a day. That'd be great.
Everybody could tag Josh on something completely random right now.
Something totally random. I'll probably have some snide remark. We won't be friends after that. But yeah, I mean, I'm super grateful. Like, we've worked diligently to grow a really good reputation. Have we nailed everything perfectly? No, nobody does. We're human. Yeah. But we do. I mean, I get up every day and I'm driven by, can we do a better job? We had our dev call this morning with the team, and if anybody's paying attention, right, they released new documents. HighLevel did on Friday last week. So I got on the call with my guys expecting them to say, hey, it's going to be 3-4 weeks. They were like, yeah, we're like 98% done. So that to me is what we're about at Noomerik. How fast can we help more people in HighLevel? And because we have, a dev team full-time that does this, and I'll get on a phone call, or the team will get on a phone call to help folks. And how do you do this in high level? Even if it's just high level stuff, like how do I build this workflow? We're happy to do it. Obviously we're focused on payments, but we're really, really grateful for the opportunity that high level's given us to, provide something that's useful.
Love it. Final word of advice for the person who looked at is on the Noomerik site right now, and they have a pit in their stomach because they think it's going to kill their conversions if they sign up for Noomerik and they charge a little bit more for transactions and have the dual pricing. What do you have to say to them?
Not one of our clients has ever lost a customer because of that strategy. We've never seen it. So of the hundreds and hundreds of people that we have in the system and using it, I've never once seen anybody's sales decline.
After the fact.
Now, maybe they stay flat from 1 month to the next? Sure, that happens because that's business.
Yeah.
But I've never seen somebody come on and then not make sales.
Yeah.
And I've never seen somebody come on, make sales, and then make less sales the next month.
Yeah. We've never seen it on that.
Yep.
Yeah.
Never seen it. Nope. Never seen it.
Amazing. Very
cool. I've had clients grow 600% over 2 years in what they're doing with our system and our strategy.
And
so yeah, it's common. That's a really good question that you ask, because people really do. We're such creatures of habit as humans to go, oh, I don't know. I really think it's going to cause a problem. But when you talk to us, when you present it the right way, when you see how it works, it just doesn't cause a problem.
Yeah.
Because the customer will see the value in what you're offering, and then they'll make an assessment, I'm going to buy this. And then they go from there. They don't go, oh my gosh, this guy, he's got 2 prices. They never do that. It's just the price.
Yeah.
Wow.
Yeah. Love it. Well, thanks, Josh. Appreciate you coming on. And if anyone wants to find you, they can go to Noomerik.com or hit you up on Facebook, right?
Yeah. Yep. Hit me up on Facebook, Noomerik.com. But yeah, you should be able to find answers there, but we're also always happy to hop into a call. You can book a call from the main page. You can even create an account for free. So if you go to Noomerik.com, at the top it says create account. You can actually create an account for free and test it. Like it's already, you can connect it to your account on high level, your agency account, and then your sub account that you would use it in. You can run tests. You can set up automations. You can see your contacts come in. You can send invoices. You can put payment forms out there. You can do all of that for absolutely no cost or obligation, just your time to test it out. You don't have to put a credit card in. None of that stuff you have to do to get an account with us. And at the end of the day, if you decide that we're a good solution for you, once we get you a merchant account, whatever you've created, connected, all stays the same. We just literally flip a switch on the back end and now you can start taking live payments. So
awesome. Thanks, Josh.
Yeah, thank you, Keaton. Appreciate it.